Hey, good afternoon, everyone. Thanks so much for giving me your time. And what I'm here to do is show you what I think is we call it our market analyzer, but it's the most powerful way, I believe, to find really, really good entries on dozens of Forex markets, hundreds of stocks, multiple futures. It's really going to show you the sweet spot to trade. And what I want to start off by doing is explaining exactly how the analyzer works and why it really creates such really opportune trade opportunities. Now, I'm going to start by dropping the slide. And what I want to do is I want to put up paint. I was thinking of making a whole bunch of slides, but I think it's just as good, and I have these slides to just show you what I'm talking about, and then I'm going to bring over some an analyzer template and show you how that works. Now, most market analyzers look at very I'm trying to think of the right word, but they look at the same thing. They're looking at rising channels or falling channels. They're looking at rising triangles or falling triangles. They're looking at certain market formations. Now, these kind of patterns are helpful, but they are not going to make you profitable. What you're looking for is a break of the triangle to the upside and then a pullback to support, and your long would be right here. So what they're going to signal you is a breakout of the triangle. Now, the problem with this signal is that an enormous number of them fail. I mean, you're going to get winners, but you're going to pull in 1 ton of losers. Now, in a rising channel, it's the same thing. You're going to break the channel to the upside. You're going to come back, and then you're going to take your long. Now, I don't know for sure if they actually do, but you can also look at a bull flag pattern. There's the flagpole. There's the retracement. There's the area of consolidation. Now, here's the area of upside resistance right here. If price breaks through here and retests and then goes up, you've got an upside breakout. Or if it consolidates here in a nice channel, you can take the breakout of the channel, the pullback, and the continuation with the upside target being the top of the flagpole. Now, this is what most scanners are looking for, these types of patterns. And they're not going to give you the complex trading pattern that I just talked about that you're going to use to get into the trade. Remembering that a lot of these patterns fail you, but they're going to look for a breakout of a channel, a breakout of a bull flag pattern, or a bear flag pattern. It's exactly the same. Where the stock goes down, then comes up, then retraces back to the downside and consolidates, and you look for the break to the downside. That is not going to make you any money. And this is what I would say 99% of market analyzers or trade scanners, whatever you want to call it, look for. In addition, I don't know if many of them do a multi-time frame analysis. I haven't looked at them lately, but I'm not sure if they do. And if they don't do a multi-time frame analysis, they're really doubly ineffective. So I want to show you how ours works. I'm going to drop paint. In fact, drop all of this. Now here's the analyzer, but I don't want to really talk about it yet. It's accumulating data for stocks on the entire NASDAQ 100. And it can look at stocks, it can look at futures, it can look at Forex. And you're going to have to open it up about a half an hour before you want to trade, because obviously it's got to accumulate a lot of data. We have it formatted for a 5-minute, a 15-minute, a 4-hour, and a 1-day, so you can use it to day trade or swing trade. But these inputs you can determine. It's totally configurable. But what I want to do is show you what you're looking at so that you understand exactly how it works. Now, just for teaching purposes, I'm going to use, I can't get it to go. Let me go to the data series here. Let the chart reload. Now, what you're looking at here is a chart of Netflix. Now, what I want to do also, bias. Hold on 1 second here. Okay. So let's take a look at what the scanner is looking at when it gives you a buy signal or a sell signal. And it's looking at multiple data. Now, first of all, and the most important thing, it's assessing market structure. And there are very, very few scanners. In fact, I don't know of any that do that. Now, in order for it to flash you a short trade, you've got to be below the 50 price. In order for it to flash you a long trade, price has to be above the 50. In addition, because it's looking at multiple parameters, it's really a complex algorithm. In order for a short trade to signal, you also have to have the 15 below the 50, and it's got to be red. In order to signal a long trade, it's got to have the 15 above the 50, and it's got to be green. So what it's basically doing is a multi-time frame analysis, and I'm going to show you how that works, of trend, just not a simple signal. Now, the market's really slow right now, and it's slowly loading the data. And up top, I mean, I can put in any instrument that you like. I can put in a Forex pair. I can put in crude oil, doesn't make any difference. And the inputs that's important to you is going to depend on what time frame you're trading. Let's not even worry about that right now. Now, what we have down here, and I have a lot of slides for this, and I really want to talk about it fairly briefly because I don't want to. Let me just make sure that this has got the right input in it. See, it's on a minute. Let me change it to range, and this is going to be a 13. So what we're going to do, in fact, we're going to make it an 8. And I just pulled up Netflix for the heck of it. Now the 13's the better. And what we're going to look at here is, hang on one second, 2 Unorenko. Here we go. We're looking at a multi-time frame analysis of momentum. Now, if you haven't heard me talk before, this can be a little bit complex. And I'm going to bring up some slides really quickly. So I want you to understand what this multi-time frame gear is doing. It's really critical because it's an assessment of momentum, and momentum is a metric that looks at price acceleration to the upside or price acceleration to the downside. And I just want to explain that really briefly so that you get a great idea of when the market analyzer is going to signal and why it's so important to have momentum in your favor. I mean, we chose the parameters that do this very carefully. And this one is critical. So let me bring up this slide deck. And it's not a lot of slides, but I do want to explain this to you. Now, just really quickly, because I don't want to get bogged down in this, you know, George Lane created this indicator in 1957. Now, the stochastic oscillator, when he created it, and I'm going to make this much briefer than I normally do, was an oscillator that he used simply to trade divergence. He did not use this to track the direction of price. He looked to fade the market only on a divergent signal. Right behind him after the stochastic oscillator, there was, I think, Williams percent K, relative strength, ADR, ADX. Essentially, they're all created to provide you with divergent signals, to fade the market, to look at to see when the oscillator is overbought and anticipate a short trade, to see when the oscillator is oversold and anticipate a long trade. And back in 1957, that may be exactly the way the market should have been traded, because the market now, and one of the core principles that we use here at Rightline in order to trade, is that the market's changed. And what has changed now is that probably 60 to 75% of all volume in any given market is driven by large institutions and banks. And there's now no mathematical way of determining a top or a bottom. And although divergence may have worked really great back in the 50s and 60s and maybe the 70s, if you try to trade divergence now, you're going to get crushed. I mean, you're going to get run over. You're going to get some signals that work, but you're going to get multiple signals that fail. And the reason they're going to fail is because because big money is not done driving the instrument up. And I think all of us, no matter what we trade, are familiar with stocks, futures, and Forex markets that will just go up not only for a day, but assume an uptrend that lasts for a week, a month, or many months. And those markets on any time frame are going to stay overbought for a considerable period of time. And believe me, they're going to give you divergent signals. The problem is if you take them, you're going to get run over because big money is still not done with what you're trading. They're going to run you over. And in fact, big money is looking for you to counter trend trade the market so they can run you over and help propel the market in their direction. I mean, if the market's going long and you sell your contracts to go short, when you get run over, you're going to have to buy them back, and you're going to push the market up even higher. It's sort of like a short squeeze. So they're looking for traders to go in the counter trend direction. Now, momentum measures something that's really critically important. And the reason that George Lane created the oscillator was because momentum is what's called a second order parameter. Velocity is a first order. So if you take a race car going around the track at 100 miles an hour, it's got a constant velocity and it's got a constant momentum because it's not increasing in speed or decreasing in speed. But as soon as that car starts going faster and faster, momentum starts to increase to the upside. And as soon as the car goes slower and slower, momentum starts to increase to the downside. So what momentum is essentially measuring the delta price, delta speed, or the change in speed of any movement on any financial market. And as price continues to accelerate to the upside, momentum will continue to rise. But when it slows down and decelerates, momentum will reverse. And because it's a second order parameter, it's a delta of a first order parameter, George Lane felt that it had forward-looking ability. And I agree with him on that. The problem is the forward-looking ability that it has now has just been destroyed by institutional money. Now, just a quick look at the formula for stochastic, because I just want you to understand what that parameter is it looks at C, which is the most current, which is the most recent closing price, and compares it with a 14-period moving average of the lows and a 14-period moving average of the highs of the candle or the day or the week, depending upon your time frame. And as price continues to approach the H14, momentum is rising to the upside. And as price continues to approach the low of the candle or the average low of the previous 14 candles, momentum is continuing to increase to the downside. And that's all we're looking for. We're looking at price acceleration to the downside or price acceleration to the upside, remembering that the oscillator is a bounded indicator. And eventually, in a market where there's tremendous buying pressure, it'll lock at 100. And when there's tremendous selling pressure, it will lock at 0. Now, I've actually tried to create unbounded indicators, an unbounded oscillator. That is not going to help us. And in fact, totally irrelevant to this talk. So just quickly, back in the day, you would look at the market, trading overbought, but here's what's really important, and I want to show you. When price accelerates up to here, it accelerates with this much momentum. When it pulls back and accelerates up to here, it has this much momentum. So you can see that it's got less power the second time it hits this high because momentum is lower. Here, you have this much momentum. Here, you have this much momentum. It tries to make a third top, and it has equal momentum. And that foreshadows a collapse in price. Only this was only operational back in the day. It's not operational anymore. But I want you to understand what you're looking at. The same thing here. Price makes a higher high on equal momentum. You want price, if it makes a higher high, to accelerate up to that high faster. So what we do, and I'm going to skip this because this is simply selling an overbought market and buying an oversold market, which again, I think was something that was worthwhile a long time ago and not anymore. Now, as I mentioned, the market can stay overbought forever, essentially, for days, for weeks, and for months. And that's because of institutional money. So what we need is an oscillator that no longer looks for divergence. It's simply looking to track price acceleration or deceleration so we can trade in the direction of that momentum analysis. And the whole scanner is based on this premise that there's no such thing as overbought or oversold anymore. I mean, it's a fallacy now. An instrument's going to be overbought or oversold when big money determines it to be. When they step aside, the instrument will decelerate, momentum will wane, and then you know you're going to step aside on the move, but you're not going to counter trend trade it. And markets will reverse direction only at the whim of institutional money. Now, price is still going to revert to the mean. That's a principle that will always apply, and that's what counter trend traders are looking for. If the 50-period moving average is your mean, when institutional traders step aside, it's going to snap back to the mean. You just can never tell when that's going to occur. So trading divergence is tantamount to trading against the flow of institutional money. If you do that, you're really going to have a problem. You can only trade in the direction of institutional money. And that's what our market analyzer is going to tell you. Now, this is the Laguerre, and forget all this coding. It's much more complex than any other oscillator. It has a default gamma, all of these smoothing parameters. We've modified this all. And here's the only point that I want to make. When the multi-time frame Laguerre, which looks at multiple time frames, is not locked green or red, price chops. And when it locks green, it means it's a bounded indicator, it's at 100, and it's locked up there. And on a 3-minute, you can see the price is simply going to push longer. Now, that's a sweet spot to buy the market because you've got so much buying pressure here. This is where you want to get in. Your chart Laguerre has to also be locked long, and it's locked long right here. It's not locked long, but it starts heading up on this arrow. So this arrow is a great place to go long. Same thing here. Here it's all chop. Your chart Laguerre is pretty much long. Your multi-time frame Laguerre is red for a little bit and then yellow. And price has got no direction. But once institutional money comes and continues to create such strong buying pressure that the multi-time frame Laguerre locks at the 100 line and the time frame on your trading chart turns green, you're going to stay in this trade all the way up to the top. And that's a great time or a sweet spot to trade long. Now remember, price is above the 50 and the 15, the 50's green, and the 15's green. So this might be an analyzer signal to go long. We don't know yet because there's a third very important parameter that we look at. And I'll just, here's just one more example. This is actually on crude oil. Both Laguiers are locked short. And bam, down you go. Right here. Chart Laguier, multi-time frame, and down you go. So you see, you're always going to want to trade in the direction of a locked Laguier because only institutional money can lock it long or lock it short. So let me take off the slides here, go to the chart, and let's take a look at our third parameter because this can trade pretty much anything that you want. The entry parameters are the same for every single instrument. And as you can see, you can modify the time frame. You can change this to range. You can change this to Unirenko. You can change it to tick. And you've got 4 different time frames to play with. If you don't want to if you don't want to swing trade, you don't need a 4-hour and a 1-day. If you want to scalp, maybe you need a 1-minute and a 5-minute. But that's up to you. If you want the analyzer, we will set it up for you and put in all of the right inputs. Now it's got a spread indicator, which is just not operational on stocks because there's really no spread, or it's so small. The spread is really for the Forex, and it'll actually show you the pip spread. So even if the analyzer gives you a great signal, if there's a really big pip spread, maybe you don't want to trade it. So it really gives you a nice window into what's going on with your Forex market. Now, if we go back to the chart, there's one more parameter that has to be met before you can take a long trade. You must have a multi-time frame alignment and trend of the trading instrument that you're looking at. And this green background means that the 2 higher time frames are strong to the upside. So now you're trading in the direction of price acceleration right here and a multi-time frame alignment of whatever financial instrument you're looking at to the upside. You see, you're going to get another signal right here. And the probability of taking a loser when 3 time frames are aligned to the upside, and this is looking at 2 additional time frames, this is looking at your chart, are all aligned green, are very small. And that's going to give you a buy signal on your market analyzer. Now, obviously, you may get the alignment on one time frame and not the other, depending upon what you want to trade. It's all done internally on this analyzer. It's looking at these parameters on its algorithm and determining the 50, the 15, the background, the Laguier assessment, and deciding whether, if there's no alignment, it's flat. If there's a short alignment or there's a long alignment. And you want that to be, because you want this to be very specific. This is the entire NASDAQ 100. So it doesn't make any difference how many instruments you trade. I mean, you can look at as many as you like, and I can add an instrument just like this. Let's say I want to add the NASDAQ. It should be here, right here. Here's the NASDAQ. Now, right now, I don't have it hooked up to my Forex data feed. And if I hook up the Forex data feed, I'll lose my stocks and my futures. But you can hook up anything. All you got to do is right click, add an instrument, and you can add them in mass. If you want to add the whole Dow 30, you can select all and add the whole Dow 30. On the Forex, you can add baskets of select all and add all these instruments. If you want to add an index, you can add an index. You can add anything you like here to help give you an idea of when you want to take a great trade. And as I said, the time frames are modifiable. So if we take a look at, and here's your incredibly good trade right here on Netflix. From here, it's going to take the trade all the way to here. Now, it's not important that any individual instrument gives you lots of entries. It's important that the entries that you get are winners, since you can put up an infinite number of instruments. And you're not going to get this alignment very often. It's very specific. To have the 50 red, the 15 red, background pink, and dual gears, it takes a lot of effort. And the market's not going to align for you like that very often. And what this is designed to do is to keep you out of chop. And you see, here's the long-term gear. It's not aligned. You're not going to get a signal. And there are going to be times when when your instrument's going to make a good move, you're not going to get a signal. I mean, yeah, you're going to lose some winners in order to avoid a ton of losers. And the goal of a trade analyzer, market analyzer, scanner, whatever you want to call it, is for you to avoid taking losers, not grab winners. It'll always give you great winners. And here's another one right here. It's actually on this candle. Now, this is just a 2-unit Renko. We could look at a 2-minute, a 4-minute, an 8-minute. It doesn't matter. I just wanted to pick some time frame. You see this big move up, you can't get. You don't have this aligned. And you're not going to get every winner. And this one, you do. And it's going to put you in all the way through this move. That's a huge move up. For the amount of risk you take, this is an enormous move. And if you trade 1,000 shares, you're going to make a ton of money here on a very limited amount of risk. A 2-unit Renko only is going to, you're going to take 13 cents of risk on every share you trade. And you can make, your risk to reward here is going to be 4 to 1 or 5 to 1 on every trade you take. If you take one loser, you can blow it away so easily. It's you know. And here's another short. Well, there's no short trade. So I just wanted to give you an idea. You're not going to see this chart because this is the algorithm buried in the trade scanner. And the whole purpose of the scanner is to not force you to look at 100 charts on the NASDAQ 100. It's just to allow you to look at this and take the trade on your trading chart, whatever you use to trade, whatever indicators you use to trade. It's irrelevant. But this is the algorithm based on a dual assessment of momentum or multi-time frame alignment of momentum, which is very hard to do. And really, it takes big money to do this. A multi-time frame alignment and trend, which is never a random chance event. It only occurs, again, when there's big money controlling the market. And a long trade has to have the 50 and 15 green, and a short trade has to have the 50 and 15 red. So it does a lot of work. And it also analyzes something that almost no scanners do, and that's market structure. And I'm telling you, when price is below the 50, that's when the bears are in control. When it's above the 50, that's when the bulls are in control. I've also based the analyzer on that. You will never get a short trade above the 50 or a long trade signal below the 50. You're always going to trade in the direction of the 50 and the 15 short below and the 50 and the 15 long above. So it's going to give you extremely low risk, potentially high reward trades. And the time frames you set up, again, are up to you. Unfortunately, it's Friday before July 4th holiday, and the markets is not moving. I mean, it's pretty much dead. So we're not getting a lot of, you have to be careful in looking at too many instruments, because you're going to get a kaleidoscope here of buy and sell signals. And depending upon the time frames that you want, you may want to get the 5-minute and the 15-minute red. If you're swing trading, you may want the 15-minute and the 4-hour red for a short. In fact, you may not want the 5-minute and the 15-minute up there at all. If you trade range, you can have a 5 range, an 8 range, a 13 range, and a 21 range. If you trade tick, you can have a 377 tick, a 610 tick, whatever, a 900 something tick, whatever you want. You set it up, and we will configure the system for you. So that's really it. It's not that complex to understand. It's super easy to add an instrument. All you got to do is dial it in, or if you have to, you can search, and then everything that's on your dome will work. Now, it does work on NinjaTrader 7, but it has the potential occasionally to freeze. It works great on NinjaTrader 8, or it never freezes. And we will, if you have 7 and want to stay with it, we'll teach you how you can use 7 and keep it from freezing. But 7 isn't really equipped to handle this much data. And that's the problem with it. We can play with it. We can add this Forex market, but I just don't think we're going to get any data for it. You see, it's flat. I don't have a Forex feed, so I've got no data for that. See, and it's giving me an error because I have no Forex data feed. So, that's it. Let me show you the offer, and then I'll ask you any questions that you might have. I'm telling you, in the course of a day, this is going to give you some great trades. Now, even if you just trade futures, and you want to look at, say, 4 markets, like we do, gold, crude, the NASDAQ, and the Russell, it will help you immensely. This morning, it gave me 2 incredibly good trades on gold, and it gave me a trade on crude. And so you don't need to put it on 400 different instruments. If you trade stocks and you'll trade anything, you can put it on 50 stocks or whatever you want. But you don't have to set it up. If you're trading Forex, you can use 12 Forex pairs. what's going to probably happen is you're going to get multiple buy and sell and buy signals on more than one instrument, but that's a good thing. I'm kind of just warning you how it's going to behave, because a lot of those Forex markets are correlated. So when one goes up, you're going to get two or three go up, which is very nice. The same thing with the Russell and the NASDAQ. There's a correlation coefficient, and if the Russell goes up, the NASDAQ has a predisposition to go up. May get two trades off of it. So it's a great tool to monitor if you want to watch multiple markets, and the entries are quite good and quite powerful. You're not going to get a lot of them on any individual instrument, but when you get them, they're going to be really, really powerful. So let me show you the offer, and then I'll answer any questions that you might have. Whoops, this is not it. If I can find the offer. Here it is. Now, it's normally $13.99, and it works. When we first did this, we would sell it individually, one for stocks, one for futures, and one for Forex, because it takes a lot of configuring if you want to trade all three. But what we decided to do was just let you get all three at once. And it takes Sergio a lot of coding to be able to allow you to trade all three at the same time. So you can trade 5 stocks, 4 futures, 12 Forex markets, and do it all at once. And it's going to assess them all individually. So the special offer is $7.97. It's a lifetime license, and you get free updates. And we're always going to make this thing better. As we find additional parameters that will make this more specific, it may drop the number of winners by 10%, but may drop the number of losers by 20%. We will add it, upgrade it, and you pay nothing. The bonus is you come into the trading room for 1 month with me, and the offer expires on Sunday night. And you can call 786-732-4656 anytime, even on Sunday. Rory carries his phone. He'll answer any questions that you might have. So let me see if you have any questions about it. If you do come aboard, we will configure it ASAP. Hang on 1 second. Okay, there are a bunch here. Let me go to the top. Hey guys. Hey, thank you, Philip. Oh, Ed, thanks, Ed. Okay, William. Okay. Well, remember, Ted, it's hard to look. And Ted wrote, it seems the analyzer rarely has more than one signal horizontally. Would these times with 2 signals be a significantly higher percent trade? And really, the answer, Ted, is that you're looking at it on a dead market. I mean, nothing's moving. I mean, that's the problem. So, and what happens in a low volume dead market? All the instruments just trade and chop. I mean, there's very, very little. There's a very little trend in a market like this where there's basically no volume crossing. So what this is showing you is that most of these instruments are trading and chop on very, very low volume. That's not going to happen in a market where you open it up on a Monday or a Tuesday morning and it's off to the races. And the number of columns that you want to see green or red depend on what you want to do. If you want to simply take a day trade that's going to last a minute to or 30 seconds to 90 seconds, you don't care what the 4 hour or the 1 day is doing. It doesn't matter. You may only pay attention to the 5-minute and the 15-minute. So it really all depends upon what your goals are. And you'll see that each individual time frame does its own multi-time frame analysis. So in order to get dual greens on 2 time frames, it's a very specific signal that's likely to give you a really good day trade. If you're looking to swing trade, you're going to have to wait. But when the higher time frames all come into alignment, you're likely to get a really good longer term trade. And how far you want the instrument to move is up to you. You know, you're going to have your own trade management strategy. The purpose of this is to get you into low risk entries where the probability that the financial instrument will move through for a significant distance in the direction you want it is high. How far you want to pull that trade out, or if you want to take it out in lots, that's totally up to you. I mean, we're not going to give you a trade management strategy, but we're going to give you an entry that has a great chance of moving a significant distance. It only works on NinjaTrader 7 and 8. But here's the thing about Thinkorswim. The Thinkorswim data feed will power this because the TOS, which I have, has a great API. So Sergio will just bring your Thinkorswim data feed over to NinjaTrader 8, which you can completely drop. And all you have to do is look at this. And this will be powered. You'll pay no money for the data feed because all the data to power the indicators that are in the algorithm come from Thinkorswim. So Thinkorswim's a great instrument to have if you don't have NT8. You're going to have to get NT8, but you only need a demo of NT8. You don't even need a live version. So you're not trading off of it. You're trading on Thinkorswim. You're just taking the signals. So you pay nothing for it. You pay nothing additional to simply the analyzer. Thinkorswim does the rest for you. I have Thinkorswim too, and I have, it's called the TD Ameritrade data feed, and I have it as a backup data feed on my NinjaTrader. Just in case the others go down, I go to Thinkorswim, and it's a good data feed. It's fine for future, Stephen. I mean, I think I showed you. I put one up. It's just right now, the futures market is just dead right here. And you can see, and we're not getting no data. See how the pound dollar is NA. That's because we don't have a data feed. We use it on futures every day in the live trading room, and I set it up on 4 instruments, and I'm only projecting 2 at any given